Let's see if we can start. So yeah, we're here today to learn about crypto. Great. It's a big topic. What are we going to talk about? I'm going to give you a few intro stories, a little bit of finance, a bit of economics, but not too deep because I'm not an expert in that. Going to have the cryptocurrencies, of course. And we're going to talk about centralized finance and then decentralized finance. And then also, what does that mean for the future? And yeah, hopefully by the end of the day, you'll have a little bit better like view on what is happening. And I compared a little bit, like there's an entire economy that is happening and no one is realizing like sideways to what we're seeing outside. And it's pretty cool. I know the media has been very, let's say, difficult about it, and they're portraying it for hackers, but that doesn't necessarily have to be this way. So yeah, I can't read what is being said. So if someone wants to say what is there.
No, just a stupid remark. I like the DeFi description.
Okay, so yeah, it's a template, of course. Great. Yeah, just for you guys, I would like to keep the questions more towards the end, because that's going to make it easier. Otherwise, I'm going to maybe lose my train of thought a bit. I will definitely make sure if we have some time left. So I have to put this here. I'm not a financial advisor. I'm not certified to do any of this shit. This is purely my own opinion, and it's for entertainment, because I don't want this to happen in, like, Fred, you told me to buy Bitcoin, and then tomorrow it crashes completely, and then I'm liable. So you guys have, you can do completely whatever you want, but that's what I wanted to say about that. So is this talk gonna make me filthy rich? No, probably not. I just want to teach you guys something, and I hope you're gonna enjoy it. I want you guys to make sense of this, of the industry a little bit, and get rid of the difficult jargon words that are happening in the industry, and that you might see floating around. So first of all, I hope you can hear my presentation as well, because I'm sharing a tab. I've never done it before, but I'm going to show you a video clip about let's say 20 years ago. People were having this conversation about what is the internet anyway. Tell me if you can hear it.
As I was doing that little tease.
Oh, that's
that little mark with the A and then the ring around it.
At.
See, that's what I said. Katie said she thought it was about.
Yeah. Oh.
But I'd never heard it.
Around.
I'd never heard it said. I'd always seen the mark, but never heard it said. And then it sounded stupid when I said it. Violence at NBC.
Yeah, I heard around or about in the lunchroom the other week.
There it is. Violence at NBC. GE.com. I mean.
Well, Allison should know.
What is internet anyway?
Internet is that massive computer network, the one that's becoming really big now.
What do you mean? That's big. How does one? What do you write to it like mail?
No, a lot of people use it and communicate. I guess they can communicate with NBC writers and producers. Allison, can you explain what internet is?
No, she can't say anything in 10 seconds or less.
Oh, Allison will be in the studio shortly.
What does
it mean?
It's a giant computer network made up of started from.
Oh, I thought you were going to tell us what this was.
It's like a computer billboard.
I think you guys get the idea. So apparently back in the day, people were even questioning, what is the internet? Why are we going to use it? And that's a little bit the feeling that we have these days of there's this huge movement that is about, being introduced, and a lot of people are questioning it. But in essence of how it's being introduced, it can't really be stopped. You can start banning it, but I'm going to talk about that a little bit later as well. But it's completely decentralized, as what they would say.
Back now at 56 past, I wasn't.
Let me try and go next. Yeah. So I want to start off with what is money, and I want to make that a bit more abstract. So if we go to this thing called Investopia, it's the Wikipedia for investments and stuff. They say money is an economic unit that functions as generally recognized medium of exchange for transactional purposes in an economy, which is, yeah, quite an okay translation. But I've seen a few other people talk about it. Dan Held is a pretty big spokesman of the cryptocurrency scene as well. And he says, a technology to transfer value for goods and services efficiently. And it's only normal that the technology around us would improve money. So this, we say that technology doesn't always have to be something technical. people might differ that during when we just had horses and carriages, a car would also just be technology, right? So stuff is being introduced to us, and as we know it, everything might change, and that doesn't necessarily have to be a bad thing. So here's some money. So banks make money by saying, here's money. I don't know if you guys all know it, but they literally type in zeros on a keyboard. So this is Jerome Powell, from the head of Federal Reserve, explaining it. And at this moment, unfortunately, has a really crazy job with the economic crisis and with COVID and everything. So I'll explain later what that means, but he gets a lot of hate, and he's just quickly saying why that is.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
So if you think about it, if we have money on our bank account and there's just money being printed out of thin air, like, a lot of people are upset by that, but what is the implications? And of course, the internet goes quite wild on those things, and memes are being created from the same guy. This is being said like printer goes brrr. That's what they always say. So yeah, I mean, more jokes about this. Rule 11 on the Monopoly rule book, you guys should definitely read. It also says the same thing. The bank has enough paper money to operate again, and you would issue new money on slips of ordinary paper, which is exactly the same thing what's happening. But it's quite concerning to see that this was 2020, that this was the amount of money that were created. It's M2 money stock is like how much is in the treasuries. You can see that last year, quite a lot of money got created out of thin air. So 25% of all US dollars were created last year. And I'm speaking a lot about dollars and the American economic system, because we know that stuff that happens over there has an impact here. Look at the 2008 impact of the financial crisis and everything. And that's also when everything went with Bitcoin and stuff was actually set in motion, because a lot of people were fed up with that system, and they started to understand that stuff is somehow made, like it can be changed, and maybe stuff that we have been doing for a long time doesn't have to be that way. So like in the 1970s, for example, the dollar was always backed by the amount of gold. So that meant the paper money had a value that was directly linked to gold. But yeah, let's dive into that a little bit, like, because stuff is being printed. But how do banks make money? Like, it's a thing called fractional banking. And the whole world uses this system, which in essence means that if you put 100 francs in the bank can use a part of that 100 francs to borrow to other people. That's how banks work. So people then pay back the money with interest, and that's how the bank makes money. But now do this exercise quickly with me. So top left, you've got Fred. He deposits $100, and he deposits it to the bank, and the bank loans it out to another bank, but he keeps a little bit in reserve, and he loans that other amount back to another bank, and that bank then loans it out again. So we've created a system where the amount of outstanding debt will always be more than the amount of money available in the world, which is a bit weird. So you made from $100, you made $170, right? So this is all like how it's worked. You can look up fractional banking or Cantillon effect. That's also one of those things. So, but that's why prosperity and economic growth is so important for us. So that, like, it feels a little bit like a Ponzi if you think about it, like borrowing more money to pay the other points of debt and other people. So the advantage is that as a bank, you can loan out money you don't have. So it's actually from your customer. So, but the customer is never gonna ask back the money, right? So like, it's fine, or is it? we all know pre-COVID, the bank was already doing crazy things to make sure that we print enough to keep up with the economy. What do you guys think is the reserve ratio in Switzerland that the bank needs to have available? Sorry, this needs to say cash a bank needs to have available. Yeah, you don't have to answer. I'm just going to tell you. I said it was in the previous slide, it was 10%. It's actually 2.5%. So, and it's 1% in Europe. So the minimum reserve required currently amounts 2.5%. So from the 100 francs that you put in the bank just has 2.5. 97.5% is mortgages, credit, and debt. And you can Google it, like reserve ratio. It's all there. So that means if tomorrow 2.5% of cash gets requested at the bank, then everything basically collapses. So, and if we don't watch out, we could have the same situation as Cyprus, right? You can only request 20 bucks a day out of the wall. We already had that situation in Greece, right? Like that was the moment where you could go two ways. It's only because no one in the world is requesting their money at the same time that this entire system can stay afloat. So why am I talking about all of this? Let's dive a little bit deeper. And I mean, I promise I don't bore you with all of this economic stuff, but it's important because this will shift your mind. This was where my mind actually went like, what the hell is actually, I didn't know about all of this. Let's talk a little bit about inflation. So the central bank measures the inflation rate by comparing a thing called CPI. That's what you see here at the top, Consumer Price Index. You have to see Consumer Price Index is basically like a bucket of things, of products that are being monitored compared to the previous years. So sometimes I guess you or your parents have seen on your salary that you get a salary increase based on the index. That's basically this. So, and we could talk about those things because people say that's because of inflation. And the government like announces that an annual inflation rate in the US was 1.7% in February for 2021, which itself, I guess, is okay. So you can look that up. Trading economics, it's all online available. So 1.7 inflation rate. But let's take a closer look. And this is also all public available. This is what the Fed reports. That's what I just said on the previous slide. But if we see inflation year over year, that's what it says here on the left. So year over year means a specific date, like 2 weeks ago or 3 weeks ago compared to last year. So we know that lumber, silver, copper, corn has all been like going extremely high. Like everything is going up like crazy. And for some reason, the Fed just says it's 1.4, right? That's all fine. Year to date, here on the right says that's from January. So when the year started to date, so till now, and I looked it up a few days ago, lumber, that's why it says here lumber 49% and lumber here 115. That's compared to the same date on last year. That's just the one on the left is longer. But as you can see here on the bottom, that the things like long bonds, that is like basically a 5-year note or a 10-year note or 30-year-old bond, that's things that you can buy, are doing extremely bad. So things are not really making any money. Like we know interest rates on the bank are close to zero, right? But I should definitely note that the amount of inflation or money printing, all of that stuff is not only like an approximation for inflation. So like inflation is a very difficult topic. So also money velocity, unemployment, and price of other things definitely go in this. So it's very subjective of what is basically inflation. And certain people have a different understanding of what that actually means or what that could be. I hope you can also hear to the next clip. It's one of my favorite ones from a big crypto investor, and what he also mentions. And this is something that is true for all companies all over the world. People are looking for what is called a hedge against inflation, what you're seeing here. Everything around you is getting more expensive, but we're not making equally amount of money.
Okay, so Keith, I have a comment on Claude 4. First of all, there's a group of people in the world that you trade with that believe that inflation is equal to CPI, and therefore you can define a Claude 4. there's a group of people that I align with, the Bitcoiners, that believe that the true inflation rate is not CPI, but rather it's the asset inflation rate. It's the rate at which the long bond or the T-bill or equities have been moving up for the past decade, or the expansion of the monetary supply. So if you focus on inflation as CPI, it's 1% or less. If you would focus on inflation as the monetary supply expansion, it's 15%. And I actually think that the inflation rate for the past decade is 20%. If you look at the cost of a 10-year bond that yields $50,000 a year in interest, it went from $1 million to 10 million in 10 years. That's 22% inflation. So there are different, over the near term, if you're trading with people that buy into your CPI definition as inflation, then that works. But if you're looking over the long term and you're trading with people that actually buy into the asset inflation rate as the inflation rate, you come to a different conclusion. Well, my last point is, in the near term, Keith, in the near term, these things work. But over the long term, adoption makes sense. Like all of your arguments about why you should short Facebook in 2013, they're all wrong. Facebook's trading at $280 a share. They're all wrong. You should have never sold it ever, ever, ever. Now, what happens to all these wonderful models if 10 billionaires decide to buy $1 billion of Bitcoin each and announce, we bought it, we're not ashamed of it, we're going to buy more? All your models are destroyed, completely devastated. Bitcoin goes to the moon, because what really matters is, with Facebook, does it work? Do 1 billion people use it?
Why should you care? That's what I meant. So the clip itself just talks about a guy saying that everything else is getting more expensive, and also inflation is happening, and he believes that inflation is not 1.5%, but as we've seen through all the prices around you, from all the numbers that I just showed you, it's actually way more. It's actually around 8%. But if money in a bank is not giving you interest and the world around you is getting more expensive, you need at least 8% annual interest to break even. So what that means is, if you make money and you go to work and you put your money in the bank, 8% of that is going to go already away. You need 4%. Like if you were making 4% last year on stocks or whatever it is that you're investing, you need an additional, you need to like minus 8% that, because it's getting way more than 1.5% than the government is saying. And it's already, you can already see in the Netherlands, this is an actual bank receipt. We're seeing negative interest rates. So that means that putting 50K on the bank makes already 0.5% per year. So you're paying someone. It's literally better to put the money under a mattress. So what is the root problem? So with conventional currency, we need so much trust to make it all work. So the central bank must be trusted not to debase the currency. Debase currency means printing more money. But the history of all currencies has shown that this is full of breaches of that trust. Look at the 2008 financial crisis. Banks must be trusted to hold their money and transfer it electronically, but they lend it out in waves of credit bubbles with barely any fractions in reserve. We have to trust them with our privacy, trust them not to let identity thieves drain our accounts, and their massive overhead costs make micropayments impossible. Like, it's very difficult for very emerging markets to basically do transactions and all of that, and it's very selective as well. This is where I'm showing you that the big banks also have a lot of fraud and anti money laundering stuff is happening in there as well. So it's big. Central banks have an information problem. So they need to study and adjust trillions of different information points to make the right decisions to let the economy run. So they can print more money in the hope that people would spend more, and they can adjust the interest rates, but it's quite difficult. So you have to look at it like this. Like, imagine a car and all you can do is use the rear view mirror. So like, that's all the historical data that you can use based on the future decisions to adjust policy. So like, print more, or like put less interest rates. And the gas and the brakes, they basically take 30 seconds to kick in. So that's what is happening with our economy. So they just have to like look at it, they tweak it here, tweak it there, and then stuff goes up and down. So yeah, we have to watch out that we don't create stuff like this, right? So like, this is Venezuela, 2018. this is how much it costs for a chicken on the bottom, on the top left, and then Zimbabwe, $100 billion. This is called hyperinflation. So we have to trust the government in the world that they don't overspend. Otherwise, we create things like this. Now, this is where I want to talk to you about. That's why I wanted to give you this introduction. We want to talk about cryptocurrencies, and the primary value proposition is that they enable storage and transfer of economic value without the need of an intermediary, such as a government or an agency or a bank. Let's talk about that a little bit. And I want to make this, I don't want to go too deep in all the like code and how difficult it is and how tech savvy you need to be. I want to try and abstract that a little bit more. So imagine me and Elena, we're sitting on a bench. It's a great day. I have an apple. Let's imagine a beer or an apple, whatever you want it to be. And I give it to Elena. Elena now has the apple, right? And I don't have the apple. That was quite simple. So like, let's look a bit closer how what happened. So like my apple was physically put into Elena's hand. So she knows it happened. I was there and she was there. So she has it. So we don't need a third person to like help us figure out what happened there. So like we don't need someone else to look over the shoulder or to see the apple is hers. She can give the apple to someone else. I don't have any more. I can't control it anymore. I don't have any physical power over it. The apple has left my possession completely, and she has full control over it. So that's what an in-person exchange looks like. It's really a bit the same. So whether I'm giving her a banana or a book or a beer or a dollar bill, but I'm getting ahead of myself. Back to apples. Now, imagine if I have a digital apple. So here, I'll give you, Elena, a digital apple. Now it gets interesting. So how do I know that the digital apple that I gave and that used to be mine is now yours and only yours? Think about it for a second. It's more complicated. Like, how do you know that I didn't send that apple to Rose or Armin or maybe Timon as well? And maybe I made a few copies of that and I posted it to a forum or somewhere like on an email to a couple of other people. So as you see, the digital exchange of these things is a bit of a problem. So sending digital apples doesn't look the same like physical apples. And some brainy computer scientists actually have a name for this, and it's called the double spending system. But the double spending problem, sorry. But you don't have to like focus on that. But they never solved actually this problem up until now. Maybe these digital apples need to be tracked in a ledger. This is what the bank also used. It's basically a book where we track all the transactions that come in and out. And this is what they use on a global scale as well. So banks compare ledgers and then they transfer things this way. Someone has to be in charge of it, right? That's a centralized system. So, but what is the problem with having one person in charge? So what if someone decides to create more? So like he could just add a couple of digital apples to his balance whenever he wants. It's not exactly like when we were on the bench that one day, it was just me and Elena trading an apple. Banks have so many intermediaries and so many different parties involved, and that requires a tremendous amount of trust. So is there any way to closely replicate that park bench, just me and Elena, transaction them digitally? It seems kind of tough, but what if we gave this ledger to everybody? So instead of the ledger living on the bank servers, it lives in everybody's computers. So all the transactions that have ever happened from all the time in digital apples will be recorded. So you can't cheat, you can't send digital apples I don't have, because then it wouldn't sync up altogether. So it's a tough system to beat, and especially if it got really big. Plus, it's not controlled by one person. So I know there's no one that can just decide to give themselves more apples. So the rules of the system are already defined, and the code and the rules are open source. So it's for everyone. So it's there for smart people to contribute to it. So that's what open source means. So like the community decides, and you can participate in this network too, and update the ledger and make sure that it all checks out. And for the trouble of you also participating in it, you can also get some free apples in the meantime. And that's actually the only way to create more digital apples in the system. So that's a little bit what blockchain is, and it's a bit mixed with Bitcoin, but I hope that already gives you a little bit of an understanding. Here on the top left, this is a little bit the flow. So this shows a little bit what blockchain is. So you've got a transaction that then broadcasts to miners, and then each block has basically information about the previous block, and the calculations that are needed to process this are called mining. So it says here, mining is completed, the mining pool gets a reward, and those are all the people on the right. So people that give their computer to basically participate in what is happening here. And that's an automated system because it just costs electricity. And then the transaction is complete. So let me see. Oh yeah, sorry. One of the things of Bitcoin is a principle set in code, which is called the halving. I'm already explaining this very early on because it's one of the most important things that you need to understand. Every 4 years, the rewards that these miners here on the right get are cut in half. So you see here at the top in the first column, it says 50 new Bitcoin created every 10 minutes. The second one, 25 new Bitcoins. The third one, 12 and a half. And we are now currently in the fourth cycle. So we're in the fourth halving. And you can see that the price is relative to the time. So basically, the longer it takes, the less Bitcoin is actually being created and the more expensive it gets. So we can already calculate when the last Bitcoin will be mined. It's going to be approximately 2140. So yeah, still quite a long time, but it's possible that the Bitcoin network or protocol will change over time because people can contribute to it, but that's very unlikely because it needs to have like appropriate amount of votes and everything, and it's very community driven. It's like what is best for everyone, you know. And there's people actively working on it, like Bitcoin contributors, and yeah, everyone can freely participate in that manner. So I want to just walk briefly through a few principles of Bitcoin, and this doesn't mean that this is the same thing for all cryptocurrencies. So this is only what is about Bitcoin. And there's a lot more cryptocurrencies in the world. I think around maybe 10,000 different currencies popping up every day. So the first one is no censorship. So nobody should be able to prevent valid transactions from being confirmed. So I think people notice PayPal or other banks or whatever it is just deny transactions because of a certain reason. I think people, or like, I think we all have maybe transferred or tried to transfer money abroad sometimes, which is also very costly, by the way. Open source, as I said, you've got contributors and maintainers and people that will help the whole community. Permissionless means that there's no gatekeeper should ever prevent anyone from being a part from the network. So you can study this graph maybe a bit more on your own, but there's a few cryptocurrencies, as you see on the left, which has a CEO or which has a certain person that drives it. And that makes it very, very vulnerable because if like the government is already trying to sue Ripple, for example, for certain things, but you cannot really sue anyone for Bitcoin or for Ethereum. That's another coin. There's no one that you can say like, oh, that's the one person that we have to sue because he's doing some illegal stuff or just there's stuff happening that we don't agree with. This is a permissionless thing. So the blockchain allows people to act anonymously in some way. And it doesn't always have to mean that it's negative, you know. Pseudonymous, that means that there's no gatekeeper should ever prevent anyone from being apart from the network. So as you can see, because everything is public and open, on the left, this is a transaction that is happening. You don't have to study anything what you see, but what you need to know is that this is an address, and one address is something to someone else. And because it's open and public, we can put bots on it. So what you see, this is whale alert. You can follow that on Twitter, and you can see this bot just tracks a transaction that is being happening from this amount of Bitcoin is being transferred from one wallet to another, or from one, because sometimes they also identify wallets that it's from a specific company or an exchange or whatever it is. And people comment on them and saying like, okay, this is the reason why this happened, or this might be a red flag and that's why the price is going up or down. But I don't want to go into anything related to trading. Like what I want to focus today on is more on making you guys understand what this Bitcoin movement is about. And if you want to do day trading on the side, that's your own decision. But then you're going into the speculative mode, and speculations and Trying to think about the price, if it goes up and down in the short term, is a totally different thing than trying to understand what the principles are of what we're trying to do here. And it's sometimes very difficult to see the lines blur, because everyone wants to have money and wants to make a buck, but on the short term, that doesn't mean that it's going to go up. But long term, time has proven that it seems to go always up, and that's because of the halvings and the things that I just explained. Fungible, a lot of things we've seen in the news and in the media. NFTs, non-fungible tokens, are getting so much traction these days. It's very difficult to hear, and no one really says what it means. So fungible means that all coins are equal and should be equally spendable. So as you can see, this is a good diagram to understand. So Bitcoins, one Bitcoin is the same as one Bitcoin, or one Ethereum is one Ethereum. The same is like air miles. It's not really tangible. This cat that you see here is a non-fungible token. I don't want to dive into that. This is everything with NFTs, what you see these days. Copyright is a bit the same thing. But then sometimes you got like tangible assets that are then non-fungible. For example, the Mona Lisa, or yeah, you can grasp it more if you would read these things a little bit better, if you want to have more conversations about that. But I don't want to dive into that right now too much, because otherwise we would be in our byte zone. So irreversible transactions, so confirmed blocks, as I said before, that like each transaction that happens has the information of the previous block. So that's why it always becomes bigger, and it becomes more power to actually calculate these things. So confirmed blocks should be set in stone, and the blockchain history should be immutable. So you can't change what has happened. So it's always, so like things like this, where the buyer's bank has reversed this payment. This seems good in some way, but this is a principle of Bitcoin that we couldn't go around. I mean, I talk about we, it's not like I was involved in this, but basically, yeah, you shouldn't be able to reverse a transaction. There's no central authority, right? So what is very much recommended is, if you do a transaction to a different address, always try and do a small amount first. Don't like send a huge amount that you're going to lose. If it's a new address and you're not sure, try it out first, and then see later what's going to happen. 21 million coins. That's also very important to understand. So all other goods, we all know, supply when the demand increases and the supply so the value goes up when the demand increases, of course, and if there's low supply, then everything skyrockets. But with Bitcoin, it's a bit different, because the supply is fixed. So the economic incentives, what they mean by that is it's only 21 million coins. And before you say that's not enough units for the entire world, realize that actually you can break one Bitcoin into 10 to the 8 units. So in other words, there's this amount of total units available. So you shouldn't worry about, oh, do I need to buy now one Bitcoin? No, you can just spend $50 and then you can buy a small amount of Bitcoin. And there will never be more, because that's because of blockchain technology. That's how it works. I also don't want to say, like, how I see it is, like I said, with that internet clip, it doesn't mean, another comparison, it doesn't mean that like in 10 or 50 years, it's still going to be Bitcoin. Compare it to MySpace back in the day. Like now it's Facebook and Instagram, but that doesn't mean that and today it's Bitcoin, and the market has chosen, as I'm going to show you in a second, but doesn't mean that it's going to be the same way in a couple of years. It's just what is shown. So the state of Bitcoin now, to show you to the speed at what stuff is happening, Bitcoin did this. So it's now at 1.6 trillion. In 12 years, what Apple basically did in 40. So we are at a certain level of okay, sorry, I want to say what market capitalization is. So what are we looking at? Market cap is the share price multiplied by the number of shares outstanding. So this means the amount of Bitcoins that are available times the price. So I read a tweet something today. If we are at 70,000, the price will probably beat Alphabet, so Google. So yeah, just to give you a bit of an idea how big this already is, and like people are still thinking about it's not really a thing. Like, why would Bitcoin ever succeed? It doesn't mean that Bitcoin will be a means of payment, but it just means that there's value behind it. A lot of people see that there's value behind it, and it's more about a store of value. People talk about gold 2.0. Like imagine if you need to buy $1 billion of gold. It's very chunky. It's very difficult. It's not like, imagine transporting that to China. How difficult is that? I'm going to show you in a second what you can do with $1 billion of Bitcoin just on a USB stick if you want. So the state of Bitcoin now. I took these screenshots like yesterday or the day before. So we see that the big banks are also starting to follow. So we see Goldman and Sachs offering digital assets to wealthy clients. Morgan Stanley also same thing. BlackRock is a huge asset manager, also same thing. And this is something that was quite particular. If you guys would be interested, you can, Fidelity is one of the largest investment firms in the world. They have 4.9 trillion assets under management, and this is their director of global macro. So he said, in my view, Bitcoin has evolved to the point that it could be treated as a form of digital gold, a possible counterweight to future monetary inflation. My current take on the currency here. So basically, that's the report. You can read it. It's a lot of mumbo jumbo, but there's some, I mean, really good stuff in there. And the fact that these big and bright minds say that something is happening might also show other people that it's pretty neat what is going on in the industry. So yeah, of course, last couple of months, Bitcoin just became way less risky because one specific guy bought some. It was 1.5 billion. It was Tesla. And he also announced a few days ago that you can now buy a Tesla with Bitcoin. So that means, so they're using open source software. And they said Bitcoin paid to Tesla will be retained as Bitcoin, not converted to fiat currency. So that means that he wants to store it. He wants to keep it for what has happened last couple of years. He doesn't mean to sell it. So yeah, interesting things are happening in the industry, and I think it's very cool. So this leads me to two more topics that are coming on. One is centralized finance, so CeFi, and a centralized exchange, CEX. And the second topic will be decentralized finance. Let's quickly dive into centralized finance. I know we have 20 minutes left, and I don't want to take too much time with you guys, but maybe the demo we can do another time if you guys are still more interested in this. So centralized exchanges, on the left, we all know banks, different people that offer money or that you can change your currencies with, or that offer some bank services like loans. Same is happening actually on the crypto side. We've got huge players like Kraken and Binance who are incredibly large, where you can create an account and you can change your dollars or euros or francs to whatever cryptocurrency that you want. This is a centralized authority. So the original proposition of Bitcoin was that everything runs in a trustless manner. Like I said before, I don't need permission to send one Bitcoin to one person. So Bitcoin in its current state might still be too difficult to use. You need it on a hard drive, or to store it in a wallet, like in a software wallet. I'm going to share with you what that means. And if you forget the password, this is true, everything is lost. So for most people, a centralized exchange like what you see here on the right makes sense, but you still need to be aware of the risks. So governments might do things to ban it, or even exchanges say, like, look, don't leave your coins on an exchange. If they get a court order, which is basically the highest of what the government can do, there's nothing they can do. You're in charge of your own safety. And the saying in the crypto world is always, not your keys, not your coins. So exchanges buy their Bitcoins from miners, but because it has a limited supply and computers have to do the work, it becomes scarce. So I can buy a Bitcoin on Binance or on Kraken. I can send it to a wallet, which is in my possession, and I can put it on this hard drive, and then I can put it in the safe. Or you can choose to put it on a wallet on your phone, which is also a thing you can do. And it's up to you to understand that if tomorrow, for example, the price crashes and it's in the safe, then you have to go and physically get it to then sell it. And you can do that with every coin that you want. So you have to make up for yourself. What I'm saying is the state of the cryptocurrency currently, right? You have to like figure out for yourself, how much trust do I want to give these companies versus the flexibility and ownership of my own coins. And the reason why I started off with all that money talk in the beginning from all the banks is that people are starting to see that stuff can go different, and we can impact and we can have our own choice about our hard-earned francs or dollars or whatever it is that you have. So a few examples, like I said, of centralized exchanges. What I keep on telling people that really don't want to deal with any trading or any hard stuff, I always somehow, I tried a lot of these platforms, and what I gave my mom and a few other friends was Swissborg here on the bottom left. It's very, you can just download it in the App Store. You can click on a few things. It's a centralized exchange. They buy their cryptocurrency from Kraken and from other big ones, so they're a bit of a hybrid. But the cool thing is that you have a central point that you can complain to. So what that means is if you lose your phone or whatever, it's on your account. So it's with them, and they basically it's called custody. They hold it for you, and it's very easy because yeah, you never know what might happen. But for people that want to do a little bit more and want to keep it more with them, there's different solutions. And you can basically also, after a while, after Swissborg, you decide to do something else with it, you can still send it to someone else, or you can still send it to a different address, your own hardware wallet, or the USB stick that I just mentioned. It's just important to understand what the risks of these things are. Like I said, these are like where to store the crypto. That's a software wallet here on the left. It's called Trust Wallet. You can download it in the App Store. You get an address. You have to save a password, like it's 12 words. You have to write that down. And those are basically the access to your address, so to your account. And you can send from Swissborg to that, or from Kraken or from Binance to that, and you hold it yourself. And you can do whatever you want with it. On the right, the bottom left, that's the USB stick that I was talking about. You can put all your cryptocurrency on that one. It uses a password, and you cannot be more safe than having something like that. Of course, I'm going to go work for Bitcoin Swiss. So what they do is they offer also custody. So custody means that the big firms, they don't want to hustle around with these USB sticks, or like people with a lot of money, they don't want to get involved with all that tech, and they just speak to a company. You can do the same with Coinbase or a big company and just go like, look, I want to buy $1 million worth of Bitcoin. How can I do it? And then Bitcoin deals with everything else. So they deal with custody of your funds, and then you hold it and you make a certain return on it. And that's how you have to see them a little bit. You can buy and sell from them as well, but yeah, they're dealing with some I think onboarding things at the moment where it can be quite expensive for new users, but that's going to be solved for in a couple of months for sure. So yeah, I don't want to bore you with too many numbers. Maybe if you want to dive into that, I'm going to share a presentation, but you can make money on top of your own crypto. So what does that mean? There's companies here on the left, it says BlockFi and Celsius. But also with other companies, you can give them your coins and they store it as custody, like I just said, and you can make up to 6 to 4%, 4 to 6% on your Bitcoin just by having them hold it for you. Of course, take into account if they get a court order or something happens, it might be that your funds are frozen. I think it takes, for Celsius or BlockFi, it takes 4 to 6 days for them to release your funds after you've requested it, but which is still fine. But on this way, you can earn 6% on your funds, which is pretty neat. Just by, instead of having it and storing it somewhere, they will keep it for you. And then same will happen here. This is Swissborg, by the way. And then, so again, this is CeFi. So what I explained with their centralized authority, but then you have DeFi, which I'm going to dive into in a second. These are not the main player. There's way more, but just this gives you like cool comparisons. There's more online that you can find. But you have to be aware a little bit. Companies like Revolut or PayPal, they also advertise like, hey, we also offer cryptocurrency, but it's really important to understand what that means. So Revolut doesn't really offer cryptocurrency. Revolut just follows the curve. So what happens in the backend, I'm not sure if Revolut actually has cryptocurrency, but that's beside the point. You cannot transfer money. Sorry, you cannot transfer cryptocurrency outside of Revolut into your own possession. You can transfer it to someone else or send it to someone else, but that's all virtual. That's all fake. PayPal has a little bit the same thing. I know for a fact that PayPal holds cryptocurrency, and they might offer it to different people in the future. Like they offer it that you can send it out. But for now, you can only hold the cryptocurrency that you buy in your PayPal account. Additionally, the currency in your account cannot be transferred to other accounts on or off PayPal. So that means if PayPal tomorrow doesn't exist anymore, you don't have anything. Same for Revolut. If Revolut tomorrow gets a court order, nothing. But with Binance or with Kraken or other cryptocurrencies, if you're trading there and you want to do something and you want to get it on your phone, easy, you can just get it out. So I know for a fact, PayPal has cryptocurrencies, Revolut just follows the curve, there's nothing. So you can speculate on the thing, and if it goes up, they'll probably give you like a decent percentage. But we've seen that with the whole, what was it, Robinhood thing again. They can just halt it, right? If something happens and it maybe grows too fast and they don't want to pay you out, they'll just say we're experiencing difficulties, which you don't have if you have your own wallet and you send everything to yourself. So we're coming to the end. I don't want to give you guys all the time these difficult topics. So decentralized finance and decentralized exchanges. What does that mean? There's a guy smiling on the top left, so that must mean it's great. Time to get our hands dirty. So DeFi is financial software built on blockchain that can be pieced together like money Lego. That's how you have to see it. So people are building software and it can plug and play with each other, and it's built together with, it's called smart contracts. And most of the traffic is currently happening on a protocol or it's called a currency called Ethereum. But other chains are also heavily being used, and it's like, again, with the whole, you can feel it really well in the industry. Is it like now it's Facebook, now it's Instagram, now it's like TikTok that is winning. It's the same thing over there. Ethereum is now winning, but it doesn't mean that that's going to be the killer at the end. They have expensive fees at the moment if you want to do a transaction. But the difference is buying currencies on decentralized exchanges. That means is that it's not like one central authority. Binance, there's a CEO and there's an entire mechanism of that it's centralized. There's one authority. Decentralized finance, it runs on everybody's computer and you can buy from each other. And this is the super exciting stuff. I want to talk briefly about stablecoins. So stablecoins are different kind of coins. Like, as you can see, they are pegged or following the US dollar. So they're used to trade in the crypto community, and they are a peg to the US dollar. They follow the value of fiat. Fiat is US dollar or francs or pounds or whatever it is. So that's paper money, fiat. And why does this thing exist is because you don't always want to revert back to US dollar or euro. So because trading pairs, so if you want to trade something to Bitcoin or to Ethereum, don't always exist with everything. So you can't just trade euro to something else. You first have to do it to something and then something else. So that's why if there's a new coin tomorrow in the market, you first have to do it probably to USDC. That's what you see here at the top, USDC. And then here you have Tether on the bottom, which is USDT. And that makes it easier to jump in and out from a specific trade and keep it and hold it. And sometimes you're happy with whatever the Bitcoin, for example, did in the past. So you're like, okay, I now want to sell my Bitcoin or a part of it, and I want to keep it in US dollar coin, but maybe tomorrow or a couple of days later, I want to buy it back. Then you do that with USDC coin or US dollar Tether, because that just works way easier. If you then want to send it back to the normal euro or dollar, you can, but it's just way easier to keep it all into the crypto like environment, let's say. It's up to you to do your own research and see which ones you want to use. So like I said, USDC and USDT are pretty safe, but do your own research. They're backed by in a vault somewhere. They are backed and they are audited by, so USDC coin is from Coinbase and Tether is another company, and external companies are auditing them and saying, yes, there is indeed this amount of US dollars for every Tether that exists. So we don't have that money printing problem that I just said before, right? So each stablecoin here is made by a different company, like I said, and yeah, it's a pretty neat invention. It's even this neat that yesterday or the day before, Visa came out that they said that they support transaction settlements with USDC. So why would they do that? Because it's cost savings. Everything over a blockchain is way more cheaper than traditional finance. So they're piloting new ways to do settlements in between different parties, and it works pretty well. And then, yeah, we'll see what the future for that is going to happen. So don't want to dive too much into this, but as you can see, this in the middle is the Ethereum sign. So we have all these different ways of the financial system. We've got commercial banking, investment banking, exchanges, brokerage, insurance, and payments. And for each one of these, there's players that exist in the decentralized finance. So there's not like one authority that says that this is true or false, or that can stop anything. You can do a transaction on this one, this cute little unicorn here. It's called Uniswap. It's one of the biggest ones. You can do you don't need, for example, Binance or another one. You hold your coins in your wallet. You can interact through your browser or through your phone directly with Uniswap and just do a transaction like that. It's super easy. And everything here is backed with smart contracts, as they would say. I'm going to skip this for time reasons. So this is basically how you would make money. You give your tokens with staking, and you get money for it. The same for liquidity mining, up to 20% sometimes. So that if you trust the protocol with smart contracts, what is happening, you can give, let's say, I don't know, 20 like an amount of Bitcoin, and then they hold it for you, and then you get a certain amount for that back on a yearly basis. So that's the interest that I was talking about in the beginning, that it's so low, the bank doesn't give you anything. So people are trying to see whatever else is out there. These interest rates are still different than the fact that the price of Bitcoin or of Ethereum is going up, or it's getting like, yeah, it's going up, but also you can get money from staking. But you should do your own research into what these two means if you want to get into it. Yeah, this is the DeFi ecosystem. It's way bigger than this. Like I said, most of it is on Ethereum. Some are on different cryptocurrencies. So on other blockchains, so to say. So some are on, for example, Polkadot or some other things. And these sound like nifty words, but every one of these are teams behind it or contributors, and yeah, it's pretty neat. I know it seems very overwhelming, and it's difficult to understand, but I would recommend just looking up for a specific name or wanting to start off with on YouTube. That's what I did back in the day. And yeah, for each transaction that you pay that happens over these networks, you have to pay a fee. And that's basically how you also, in turn, if you would provide liquidity, if you would provide your coins for these transactions to happen, how you would in turn get money from all the trading that's happening in the world. There are alternatives that make it cheaper. If we could do a demo, but it's already quite late, then I would do it. But let's keep it for another time. DeFiPulse.com, you should go and look at. You can see here it's way bigger. It's around 50 billion today. How much money is locked into a system like that? And these are like top protocols where people are interacting with. This is all DeFi. This has nothing to do with like a centralized system. You can see there's 6 billion locked up, 5 billion locked up, 5 billion locked up. These are not small numbers. This is, I mean, actively being used in the world, and there's no one to stop this. It's an open system. People can just trade with each other. They can do loans. That was the thing that I wanted to show you. You can just do an open loan on this system. It's over collateralized now. What means is you have to give in, let's say, $10,000 US, and you get $5,000 US back. But that's a little bit how the system works, and it just opens a lot of possibilities. This happens last week or this week. Citibank gave an ad like this, and this blew up a little bit. Earn 50% interest, high interest yields. That's like, was so funny, and like, what is 50% high? Like that is ridiculous. And like this, there's tweets going around like this that the government will give you 1.5% for bonds, and the city gives you 50%. But in DeFi, there's stuff that goes up to like 50% even. That you give your coins, you give your USDC or your Ethereum, and that, yeah, basically you get up to 20% sometimes, or even up to 50%. And I do want to say this is with risk, right? Like this is, people are playing around in that field, and sometimes like you just have to follow the money a little bit. That's how you could assess the risk, like how much money is locked up in that already. You can assess how risky it is versus how much chance you want to get. It's not like a lottery thing. There is actual logic involved, and you can look it up, and the code is all publicly available. So I do have to mention, this is comparing apples with pears a little bit. So like it's very early days and it's risky. So on these things, like with Citi, of course, this is a bank account and this is insured up to 250K. Like out of the box, DeFi is not really insured, but there are ways that you can insure yourself. So cool things are happening there. This will be the demo that I wanted to show you, but I'm not going to do that because we have 2 minutes left. Don't want to keep too many people. Not going to do that either. Going deeper into the rabbit hole, if you want to learn more, definitely read these things if you want to go into it. What are NFTs, DeFi, DAOs, and you can read up on it. The future of DeFi, what I wanted to leave you guys with is DeFi is currently focused on only features that resemble with crypto users. So the entire banking infrastructure. The next wave, what we saw was the whole NFT art and ownership. So think about the future of what other industries they might impact. Purchasing a car online will not be an issue. Purchasing anything online is super easy, where the transaction happens, not with Stripe, not with another player, not through a bank, directly from person to person. The technology is already there. We just need better UX and adoption. So imagine all the unbanked that is currently in the world. So people in emerging markets, Africa, everyone has a cell phone nowadays. So it's about offering financial freedom to the ones that cannot get an account, a bank account. So we know people in Africa or in the poorer countries, they skip a certain phase, as we've gone through internet through the wall, right? Or we have gone through these big computers. They never had a landline. They never had like internet over a UTP port, but they all have smartphones with a working internet connection. Think about the power of DeFi for all these people that they can just interact with without anyone telling them off. So now what? This is the last slide I'm going to give you. If you're new to Bitcoin, heed this warning. It's going up. It's fun. There will be price crashes. These can be very nasty, sometimes 30% in days. Buy what you're okay with losing. People say 5% is healthy. From your total portfolio. Hold through the volatility. Don't do day trading. Be patient and breathe. Of course, you can do day trading if you want. Welcome to Bitcoin. And then one last meme, what I thought was really funny is that people always, like, if I talk to my friends, like, dude, just buy something, whatever, do a little thing. And they're like, yeah, but I'm waiting for the price to go down. And like, okay, what do you need? You need a little bit of money. You need a computer. First, buy Bitcoins. This was back in the day, 2010. Like one Bitcoin was worth like nothing. So he says 10,000 Bitcoins at 6 cents. Damn, you've spoiled it. A year later, you sold them for $1 instead of 6 cents and spent all your money on a used car. The Bitcoins are now worth millions. You could have been set for life. All you have is a 2003 Ford Taurus. That's a little bit of meme that goes around. Like, as long as you don't do anything, yeah, it will always go up and you will like miss out. But again, it's not financial advice, but if you don't want to take it from me, maybe take it from one of the banks that are really looking into the space. Yeah, that was it. Sorry for the long rant, guys. Hope you enjoyed it.
Really cool, interesting.
Awesome. Thank you.
I have
Anyone
a
have
question.
any
Sorry, can you guys hear me? My
Yeah?
internet has been spasming the entire time.
Okay. Was
Can
it
you
for
hear me?
everyone? Was it for everyone bad or
Yes.
not?
No, it was good.
Okay. Okay, cool.
Amazing.
Go ahead, Anna.
Well, if you can hear me, Fred, so you
Yes.
said kind of all that's missing is better UX, but
Yeah.
it took you an hour to explain the basics to us. So how do you, as a UX designer, make the UX of this easy enough that people are willing to actually trust their finances to it?
It's time. To me, it's time. Like, I totally agree. I just think it's gonna take. It took Bitcoin 12 years to get some proper adoption and to get big, but I just think it just takes. You need to have layers on top of this, where people, like, we need to find the right balance between the trust in technology and like with your funds. You know, like how much do I trust the technology and what is happening here and the community around it until something groundbreaking might happen that you want to explore it, I guess. But you also don't have to start out like with all your money, right? Like don't do that. Just invest a little bit. Yeah, exactly. Just, I would say take a look, but maybe these companies will figure it out, and that's also where I want to help out a little bit and see what is possible in the industry.
I think also the entire wealth management thought from another perspective is really interesting, because before, also like in the past, probably there was like the money on the mattress. So, and now a lot of people are getting into digital products that facilitate entire banking management and investment.
Definitely.
On a fingertip, you can really invest money. So it's almost like a parallel world that you have to like understand a little bit, but you will never probably get into the details, as you don't get into the details of banks. So I think it's a matter of also trust, probably.
Yeah, very true, Marta. It's completely like that. Yeah.
What I still don't get is, like, for example, the entire ethical and like is not avoiding like crimes to happen, because if I'm a drug cartel boss, I can buy Bitcoins and still do the same that I will do in a normal bank situation. Or
yeah, I definitely think that we're seeing the governments really step up here already. So I think there needs to be a healthy mix. So there needs to be a healthy mix between how can we make sure that we help the governments figure out who are doing crimes and which is bad, and how can we make sure that we put that like away and that we don't have these things. But yeah, the US dollar is also being used as paper money, as a lot of black money right now, right? Or like very bad money as well. So but yeah, we definitely don't want to make it easier for anyone. Like I think there's ways that we can work together with governments and just see and try and make a solution. But at the current state, you're totally right. It might facilitate it even.
But isn't it explicitly anonymized?
Sorry?
It's explicitly anonymized, right? So how do you actually track what kind of transactions are happening and by whom, if that's part of the principle?
Yeah, you can. There's ways that we could actually see where. So because it's all online and it's publicly available, you could see where certain transactions would come from, and then you could figure out consensus on those contracts being used somewhere else. But you're right. It is somehow all anonymous. So I don't have a solution for that either. But what I'm saying is it doesn't. Yeah, I don't think it's gonna there was a study that showed it was only 2 to 4%. I don't know. It was something like that. I can't really say. Matthias?
So first of all, very, very interesting presentation. Really enjoyed listening to you, Fred. So one thing, I mean, I'm also a little bit interested in this, and I also try to start out a little bit with it. So there are two main things that I have, or that I ask myself sometimes. One is the thing that Marta mentioned with the criminality and everything that you can support. And another one would be also in terms of carbon dioxide footprint. That is something that you also hear quite often. So do you have any arguments that I can tell my Green Party friends why it's okay to buy Bitcoin?
I have, can you see my screen still? Can you see my screen? Sorry, I don't know if I'm sharing it.
Yeah.
Yes.
Okay, sorry. So I have some extra pages in the back. There's a thing called FUD, and that's a little bit fear, uncertainty, and doubt. That's what people call it. So a bit of propaganda. And all these things have been really debunked already. There's more that you can look into. So like price is volatile, but even though everything is going up over the years, so it does go down, and we know it's going to go down. That's how cycles work. So you can look into that. Governments will never allow it. even though Coinbase 14th of April is going IPO, so it's going to go IPO as Coin. So it's a company, and they're providing anything else than Bitcoin. It's going to be huge. Environmental impact, Matthias, this is an NCSIT discussion that you can just click into and read up a little bit. Everything from the first to the last is all the energy that is used. And this is the energy that is used in Bitcoin. So the environmental impact of all the banking systems, all the servers, all the paper, all the recycling, all the gold mining, if you put that all together, there's way more energy being used in all of those. And we have a lot of articles that say this 183 million is mainly all renewable energy. So there's way more stuff.
Perfect slide, Fred. Thanks.
Yeah. There was actually today I found there was on Forbes, there was a good article about this energy question, and there was a lot of information about how a lot of Bitcoin miners or mining companies are actually located just outside the energy suppliers, so they have really short routes, and they basically use the excess energy that they can't use, right? So if a power plant produces some energy, it doesn't always all get used, so they actually get this for basically free, because it's energy that sort of can't be used anyways. And since they want to make money, they actually have to kind of utilize those things anyway. So a lot of the energy is actually is not like the same kind of energy as if you turn on your TV at home. So there is some distinctions, and it sort of puts it into perspective that it's not quite as bad as it makes it sound like.
Yeah, exactly. There's also some cool stuff about the younger generation that is moving into it. And if you want to read up, I'm going to share it. A lot of transfer of wealth and stuff like that. Don't want to overwhelm you guys right now. I think it's just, I'll share it with you and you can take a look yourself.
Awesome.
Anyone else? Sorry for the very
exciting. How did you convince your mother to buy Bitcoins?
Yeah, I was someone that got in very early, and I was always poking her. My mom works at a bank, so I know that I'm always.
She's already
I'm always asking her, like, so are you guys already looking into it? And then I share some articles like, hey, take a look at this. These companies are doing it. These banks are looking into it. They're like, yeah, it's difficult. I'll share the presentation here, and I'll share it also in the PUX channel.
Awesome, thank you.
Awesome, Fred. Thank you so much. That was really insightful, and also a pleasure to listen to you, because you presented very well.
Thank you so much.
The whole thing. I'm a bit overwhelmed, I have to admit, not because of you, because of the whole topic. I've been looking into it,
of course,
from time to time, but it's complex and it's not easy to understand. But I'm really happy that you had this presentation here. It really helps to shed some light.
Yeah, definitely. Thanks a lot. I was also happy to be able to share it, because it's also for, like, with, like you say, like,